Keith.
Okay, what we have here is the 197 industry groups, and Keith talked about them before. And after I listened to a seminar by IBD, I decided to do something different from what I was doing with this group before. I was looking at the difference between the 1 week and the 3 weeks, and I was always looking for a move of 30 points or more. But I'm now looking at not just the difference between this week and 3 weeks ago. I'm also looking at 3 weeks ago and 6 weeks ago. And the ones that seem to be the strongest are the ones that have a 30-point move in both of those things. So the first one you see here is beverages non-alcoholic. It had a move of 30 moves from 34 to 4, so that's 30 different spaces. And it shows that the year-to-date change is 18.7%. It didn't do well on Friday, but that's okay. There weren't a whole lot of things that did well on Friday. The next one on the group was number 10, and it was up more than that because it went from 54 to 8, which is a 46 different move, and it has a return of 22.5%. Computers have a much higher rating and ranking and price, and that's one of the reasons why you'll see a bigger return there than you will on the beverage non-alcoholic, because there's fewer stocks in that group as well. The next one down from there is retail restaurants, and you see it went from 52 to 9, so that's a difference of 43, and it has a return of 28.7%. So that was very good because it was even better than the two before that. Then we have to go down the list a while, and what we see here is it made my day in two different categories. It went from 111 to 26. That is huge. That is the biggest move so far. And for the 3 to 6 week, it went from 173 to 111. So this is a group that has a lot of momentum behind it. Medical diversified. However, it only shows a return of 1.8%. So it's coming off a big downtrend because it was down from 173 6 weeks ago. So it had a lot of distance to make up. So that's one that you definitely want to keep an eye on. And then the next one after that is soap and cleaning products. And it met both of the criteria because it went from 61 to 28. That's a move of 32. And it went from 94 to 61. That's a move of 33. It does have a return of 20.9%. However, I've watched this group before, and it never really, is the leader. And one of the reasons for that too is you don't even see a relative strength for that group. Any group that doesn't have a relative strength in it, it's never really going to go that far. I don't care whether or not it has a lot of momentum behind it. It still doesn't do anything. So then we had food miscellaneous preparation went from 107 to 63. That's a 44-point move, 11.8% year to date. Then we have banks, went from 87 to 38. Notice it's banks foreign because we've had so many problems with their own banks here. They're not doing anything. Absolutely flat. Didn't show any change for the year, but it's certainly moving up. After that, we have media diversified, 138 to 40. I mean, that is very, very strong momentum. Very strong momentum. And that particular group, I think we went down too far. Yeah, has a return of only 3.8%. But that's a 98-point move in 3 weeks. So certainly something is going on there. Computer software design went from 44 to 14, but then it went down to 42 again. So, you know, it's probably just pulling back before maybe it takes off again. 17% return year to date. And here's another group with a lot of momentum. Retail, wholesale, auto parts went from 120 to 85. That's a difference of 35. And then we went from 85 to 44, a difference of 41. So met both of my criteria, has a year-to-date return of 10%. Financial services specialties went from 82 to 37, but then down to 48. So it's probably in the sideways movement, that group, 4.4% for the year. And then here's another one that had outstanding move. Medical, outpatient, home care went from 133 to 97 and 97 to 47. So that was a 50-point move for the 3 weeks, and it was a 36 point move for the 6 weeks. Retail specialty, we talked about retail being a leading group, went from 66 to 32 and then down to 48. Return of 3.6. Telecom services foreign, 116 to 55. That's a 61-point move. Only it has a negative return year to date, so it hasn't seen its glory at this point in time. Then we have utility electric power, 134 to 78. That was a move of 55. And then it went down to 52, so it didn't meet my criteria for 30 places, but that's a difference of 26 places. Computer software gaming. This group has good momentum behind it. Went from 102 to 53, so that is a 49-point move, and it has a return of 8.6%. Insurance, property, casualty. They're doing better this year because there weren't as many storms and whatnot that they had to pay money for. So 121 to 79, that's a move of 42, has a return of 3.6% year to date. Packaged food, and that could be just about anything, could be Twinkies, could be something else, went from 98 to 58, so that's a move of 40 points. 4.4%. Utility diversified, 130 to 83. That is a move of 67, which is a big move, flat for the year. Insurance life, 125 to 61, has a negative return year to date. Medical wholesale drugs went from 148 to 62. It has a return of 5.1% year to date. Automobile manufacturers, every time Tesla does well, this group seems to move well, but I mean, you don't really see GM doing much. Ford isn't doing anything much, but it's mostly Tesla. And so that particular group went from 145 to 63. That's a move of 82 points, has a return of 15.4% year to date. Retail leisure products, 68 to 24, but then back down to 65. While it had a return of 14% year to date, not really doing anything. Food, grain, and related, 91 to 60. That was a move of 30 places, but then it pulled back a bit, and it's negative for the year. And that's basically people buying corn and other kinds of things. Insurance brokers had a nice move in both categories, 146 to 109, that's a 37-place move, and 109 to 69 is a 40-place move, up 6.1% for the year. I don't know if we have anything else further down in the chart, but oh yes, this one is a honey, and I love this one because it had the best move of all. It was 197 6 weeks ago. 3 weeks ago it was 193. This week it is 85. So that is a move of 90, 98 a move of 98 places over that period of time. No, 98 places over that point in time. It's up 6.3%, and it was one of the big movers on Friday. The other ones here, banks of the Southwest went from 157 to 88. That was a pretty good move, but it's negative for the year. And financial consolidated loans is not really moving as fast as it could, nor is medical services, although they are inching up a little bit. And further down in the slide, and once you get to around the 140s, you don't really see much movement of anybody else because there's just too much for them to overcome. And finance blank checks, you can see that on a daily basis, there's a lot of those, especially on earnings that have exceptional earnings, but it's a group that's not really going to go anyplace. And then we have retail mini markets, went from 150 to 137, so that didn't make my list, but 137 to 105 did, because that was 32 places and it has a return of 3.3. It was on the move because it was in the top 10 for the week. None of the others are really worth talking about here, but if we go down to the very bottom of the chart, what we have at the bottom of the chart is, okay, there were 5 that that were in both of the categories, the 1 in the 3 weeks and the 3 in the 6 weeks. So those are the ones that have the most probability of doing the best. There were 22 that had a placement of 30 places or more from the 1 week to the 3 weeks, 21 in the 3 weeks to 6 weeks. I count up to see which market is leading, whether it's the long-term or the short-term market. Of the 197 industry groups, we had 122 of the groups that were positive, 75 that were negative, and on the short-term basis for the day, we had 67 positive, 130 negative. And my magic numbers, which we haven't gotten to on either of these yet, is 155 positive, and 44 negative, or as close to 144 and 55 in that range. And then you see that we have a move that makes the market move higher, but we're a long ways to go from that at this point in time. Because one of the things that's happening is the market's going in the opposite direction. Yes, we had a good day today, but 46% of the S&P 500 stocks are trading above their 50-day moving average, and 46% are trading above their 200-day moving average, compared to 52% and 49% a week ago. So we are going in the wrong direction on those. 54% of the NASDAQ 100 are trading above their respective 50-day moving average versus 58% from 1 week ago. So again, even though the NASDAQ is stronger, we're still not seeing, that thrust to really make the market stay high and continue to go higher. So we'll have to see. Things are just sort of treading water at this point in time. Moving on to another slide. One of the things that I had been watching on CNBC is something called the disruptor list. And I watched it for several days because they had 50 stocks on the disruptor list. And I only took down the names of 3 of them because they only talk about them. But this list has been put out, and CNBC has talked about that for a number of years because these are their top 10 from the disruptor list from 2021. And we all know Robinhood, Stripe, Discord, Sentinel-1, Diddy, Brex, Margetta, never heard of that one, Chime, TytoCare, never heard of that one, Elevate Bio. So it's interesting to look at this disruptor list because some of those stocks are likely going to be those that, are really going to make it big time. There is a special way that they look at those particular stocks. And what they do is They, sure, because I'm looking to tell you about it. I don't have that information. I love it. Okay. There's another slide for the disruptors, and it shows the 50 stocks that are on this year's list. If we can move on to that one. And what you can do is you can just Google cnbc.com disruptors, and it'll give you information, or just ask for the disruptor list on CNBC, and you'll get all this other information. And actually, this list is put out by another company. And so we'll see what we can find out there. And then there are stories. You know, if you click on any one of those stocks, it'll take you to a story about that particular stock. So, you know, it's kind of nice once you get the list that you get a little more information about them. So if we can pull up that other list. Not this one. Okay. So what this has is it has the name of the particular disruptor, but it doesn't tell you what the symbol is. And when I looked to get something that had the symbols were not for this year's list. They were from another year. So number one on the list, and it's no surprise, is OpenAI. Everybody believes in the hype, you know, that AI is going to be the, you know, be all end all. And so we'll see what happens with that. Number two on the list is Brex. And if you remember my slide from the top 10 from 2021, Brex was number 6 on that list, and it's number 2 this time around. And it says, a better Silicon Valley banker. God knows they need them because those other California banks went down the toilet. Then we have Canva, and Canva is a new face on graphic design. I don't know too much about this company, but you know, I looked into it because I said, you know, what is this all about? So, you know, new things all the time. We went too fast. Okay, then we have Relativity Space. The first 3D printed rocket takes off. And I had a funny email the other day on fake steak. Fake steak that is made out of a couple different products. And then they take something that goes up and down to make it look as if the meat actually is, you know, like a steak when you cut it. So you think you're really getting a steak, but it's something that's just man-made, that's from kelp and a bunch of other stuff that's all mixed together and dyed and for your eating pleasure. Yuck, not me. Then we have Wiz, the next level cloud security, Alto Pharmacy, Online RX, Anduril Industries, and AI-powered defense. I don't know anything about this one, but I would say that since we're cutting back on so many other things in defense, we would need something that is sort of out of the ordinary. So I would say that this would be something that, you know, we should be putting a little more attention to, because it's probably something that's less expensive than the planes or the submarines or anything else that the military would put together. And certainly fewer people are going into the military, so we need to look at something else to make the military work. Octopus Energy, extending its climate tentacles. Lineage Logistics, improving links in the cold chain. Flexport, the logistics industry's cloud giant. I'm not going to go through all of these because you are going to get the lists, but you know, there's a smattering of everything. We have heavy duty electric vehicles. We got mental benefits, knowing your customer data, all kinds of things. There's more things that AI are getting into. So I think they're going to know if you have to use the restroom before you even start going down the hall to use it. It's going to be that kind of thing someday. Big boy watching everything that we do and knowing what we're going to buy, when we're going to buy it, how much of it we're going to buy, etc. But I thought there was an interesting list. And as I said, CNBC is talking about one or two of these stocks on a daily basis, but I don't know when they're talking about them, at what time of day. And so I really haven't found out, that much. I took down the name of 3 stocks, and one of them was the first one on the list, and another one was on the bottom of the list. So anyway, for what it's worth, you can go into that, and you can even go back on that site and you will find other information from previous years, and it'll tell you what happened to those stocks. Some of them were delisted, some went on and, made it big, etc. But it's been going on for, I think, maybe 5 or 6 years already. And if we go down to the end of the list, I think there's something that tells you where this list came from. And the source, while I looked for it, PitchBook and Company is the one who looks at these particular things and puts the list together on a yearly basis. So it is not CNBC doing it. CNBC is only reporting it, but PitchBook and Company is the one who is actually putting the list together. So, for what it's worth, I think you might want to look into this and see what's happening. And what is lending democratized? Is that a way that they're taking our money from one person and giving it to another? I don't really know what's happening there. But, when I looked at that, I said, I think that's probably what it is. Okay, I don't know what this one is, but we'll have a look.
All right, so let's talk about the process. We want to get the scouting reports that you guys have for 1 month. So aside from
okay. Basically, what I did was I get a service every day called Market Club. And Market Club has 50 stocks on this particular list. And it tells you which ones are the ones that are outperforming for the day, whether it's the upside or the downside. And every day the list changes. It is free. I've been getting it for a number of years. And I've been noticing that the stocks that are in the $4 range are the ones that have the biggest moves. So what I'm trying to do now is to make a list of those particular stocks that had the biggest moves. And then what I'm going to do with that information is pull up the charts on those and try to find out how many days before it had the big move, it started to make the move. So you can see here that IMGN, Imogen Incorporated, had a percentage move of 145.59% in 1 day. In 1 day. That's mammoth. Okay. I think I would be able to take a small portion of my portfolio and play 1 or 2 of these and hold them for a day or two, take the profits and go. So, you'll see here's one that has 49.54%. Here's some from another day. And this was not a good day in the market. So, and you can see Eli Lilly was on that list, but Eli Lilly only had a return of 4.22%. So see what the contrast is between them? Would you rather make 94% on a $4 stock than make a 4% move on a $415 stock? You certainly have less money at risk in the one. So this day, the best move was 30%, and that was on the NASDAQ stock MAXN, Maxion Solar. And one of the reasons that the solar stocks are taking off is because of what the government's doing in terms of reimbursing people for using solar in their homes. They just renewed that the other day, and many of the solar stocks took off in relationship to that. So then here's some from Friday. And on Friday, we had GSI Technologies, had a return of 215.24% for the day. It opened at $1.74. Last was $5.17. a difference of $3.53. We had a 79.42% move on SPRY, a 26.5% move on First Solar, which was a $200 stock. Okay, so here's Maxcon Solar doing 30%, and here's First Solar doing 26, but one is a stock that's $36 and the other is a stock that's $203. I mean, it's a big difference. And then Bluebird Company had a return of 36.13%. So I just started to take these down. I mean, I was taking notice of them and then just deleting the file, but now I'm going to just copy down the ones that had a return of 30% or greater. And on the day that it's a really big day, I'm going to look for the ones that, I had 50 to 100% moves. But I will report back on this at another time because I think it's well worth looking into. And you can get this newsletter for free. And there should be another slide that tells you how you get the newsletter for free. And you go to Market Club Top Stocks, Top Markets plus 33 FE 72 at ino.com. So that's where you go to ask for this free thing. They do have some services that cost. They have several other services that I get for sectors, etc., on an ongoing basis. But I like this one, and I've been getting it for a number of years. And you can always find something on that list that's a mover that you never even knew about before, because it suddenly makes a big move. And one of the stocks that made a really big move, it made its low since inception, and it had a huge move up from there. Will it continue? I doubt it seriously, but one of the things that's happening in this market is there is more emphasis on the lower price stocks because people don't want to lose their shirts on a bigger investment, but they're willing to take the risk on something smaller and be in it for a shorter period of time and have smaller losses. So anyway, for what it's worth, if you're interested, you can sign up for it. Also saw something that was interesting the other day, and this is what it said. On 5.3, it said, finally, the daily market indicators page on MarketSmith shows that on a short-term basis, the overbought versus oversold oscillator is at minus 477, well below the neutral zero level. As noted on IBD Live, when this oscillator jumps past 500, the stock market is usually ripe for a pullback. To see the chart, go to NASDAQ on the daily chart at MarketSmith. Now, I don't have MarketSmith, so I'm not able to do that, but I wanted to share that information with you and some other information for the good of the group. With all the talk about regional banks recently, it's worth looking into the potential serious time bomb lurking on their balance sheets. The work from home revolution has absolutely decimated commercial real estate. Right now, the commercial real estate vacancy rate is at 18.7%, the highest ever in history. That means no rent is being paid on roughly one-fifth of all U.S. office space. And this year, $46 billion of loans are expected to reach maturity. Who holds these loans? Regional banks. Once these loans start to mature and the banks start bleeding on them, we're going to have a whole other set of problems. So I don't think the banking crisis is done yet. But I am saying that maybe shorting some of the commercial real estate might be a place that you would want to put your money in. There are a lot of commercial real estate REITs that you might want to look into as well. That's all I have for today. I will have more for tomorrow, but I need to spend more time on my computer to do that. And I got this chart, don't know where from, something I took down today, and it's for a company called OCUP. And OCUP is one of those companies that's supposed to outperform. The name of the company is called Occuphire, OCUPHIRE Pharma. It's a medical biomedical technology stock, group 28 out of 197. It develops and commercializes therapies for the treatment of several eye disorders. And this stock took off like a bandit. I mean, it was a $2 stock back in August of last year. Actually, it was down to $1.76 in June, $1.81 in August. It went up to 280, came back down, and went up to 350 and came back down, went up to 392, went sideways for a while, took off like around the 5th or so of April. And at that point in time, it was 385 a share. It is now 517. It did have a pullback on the last move here, but there are more blue bars than red, and certainly one that you might want to look into. And the relative strength on this is 99. Have not heard of this stock before. It's made money last year after losing money for several years. And while Raja is trying to find my slides from today that I sent him, I do have something to tell you about, and those are two things. One, the government decided that they are going to buy some oil and put it back into the strategic reserve. I still don't know where the oil went that we took out of the strategic reserve. I don't really think we used it in this country, but you know, we don't know where it did go, but we are going to buy. And somebody from the energy department said that we did a smart thing because we, you know, had the price of gasoline go down because we took it out of the strategic oil reserve, and now we're going to buy it back at a lower price, and you know, all is good. And they emphasized the fact that the Senate said that they had to sell X amount from strategic reserve. I don't know how that all came about. I didn't research it before today. You know, I'm happy they're putting some of that back into the strategic reserve. I don't know who they're buying it from, and I hope we're buying it from our own country. One of the other things I wanted to mention to you is something about lawyers. And it says that lawyers write the laws that channel all power, authority, and wealth to the government. Did you ever wonder why the U.S. has 5% of the world's population, 25% of its incarcerated people, and half of the world's academically qualified lawyers? Half of the world's lawyers are in the United States. These lawyers consume about 10% of the America's gross domestic product. They're taking our money. You know, they're taking our thing on contingency, and if you win, they're going to win. But they're writing the laws right now that, you know, we're going to use to try to resolve the debt crisis. And I hope that what they put in there is what, you know, our politicians have asked them to write, but lawyers are the ones that are doing it. So I have that for you. Did you find any other of my slides, Raja?
Yes, Cookie, one on the screen now.
Okay.
The best
I don't see anything on the screen right now.
Do you see?
Now I see it. If we can make it a little bit bigger. And this actually was something that I got from an email from one of the attendees today, Sam, who is here with us, and it came from the Motley Fools. And the Motley Fools said that these were the best energy sector stocks to buy in 2023. Brookfield Renewable, and the symbol is BEPC, globally diversified renewable energy producer. ConocoPhillips, symbol COP, globally diversified oil and natural gas producer. Chevron, symbol CVX, a globally diversified and integrated energy company. NextEra Energy, NEE, a leading utility and renewable energy producer. And TC Energy, symbol TRP, a leading pipeline operator and electricity producer. So for what it's worth, those are things that you could look into. I do think that we're going to see a turnaround in the energy sector because summertime is the time that we use more gasoline for our cars than we do at any other time of the year. And it also costs more to produce, so the price goes up because we change from winter to the summer fuel, and the additives they put into the summer fuel are more expensive than what is used for the winter fuel. So we have that to talk about. Before we move on to the next slide, I tried to update my information about KOLD and BOIL, BOIL, and I have some information that I can share with you regarding that. And basically, if I find what I'm looking for in my pile of papers here, it seems that we have a 13-day cycle in oil and gas. This is something that I get on an ongoing basis. It's from Matador. I've told you about this before. It's a free service. I get this every day, and if you're interested, you can get it as well. Matador.com, and they have a new podcast, Gasonomics, and that's something that you could sign up for as well. And what it says here was that the retail sales report showed a slowing and did not meet expectations. The street expected plus 0.8% increase in sales, but got 0.4% increase on the headline month-over-month numbers. The yearly numbers showed 1.6%, and last month we had 2.3%. So this report says two things to me. One, the increase in interest rates is squeezing the consumer and retail sales. Two, it says inflation is beginning to give us a sort of sea anchor effect and is slowing the economy, not killing it, but definitely slowing it. This morning, there is an interesting story in oilprice.com by Svetlana Paraskova that even with the apparent tightening in crude oil supply for the end of this year and heading into next year, according to the economists at the International Energy Agency, IEA, the market is basically shrugging off this news as it concerns over the slowing economy are outweighing supply issues. Once again, demand trumps supply the majority of the time. This is a season of high demand for both natural gas and for oil and gasoline. Finally today, one of my greatest concerns, Iran seized a third oil tanker poised to bring crude oil to the United States. The U.S. response is to increase a military presence in the area, but many wonder how much good that will do as Iran is itching to start a war with their arch enemy, us, the United States. If we go down a little bit on that slide, one of the things you see is it shows what the future prices are for different contracts. So West Texas Intermediate, Brent natural gas, USLD, and RROB. And you see that each one of these has a positive change. And so that's a good thing. And as I said, this is the time of the year that there is a greater need for those products. And here is the website for Matador if you want to subscribe, matadoreconomics.com. So I don't know if there's another slide I sent you besides this one, Raja.
One more. Okay. One more.
Okay. While we're getting to that slide, in trying to, I started to tell you that there seems to be a 13-day cycle in terms of what's going on. And this is the second part of that slide, and it just tells you what the difference is on a daily basis on the various particular products, including gold, including some other things that are listed here as well, copper. And if you basically look at the CRB index, you will see that it's been in a downtrend for some time. Going back and talking about the 13-day cycle, which appears to happen for cold and boil, one of the things that happened was cold had went from 129.2% on 4/18 to a return of 216.7% on 5/4. That was 13 days, and that was a gain of 64.9%. So now, if I'm looking at this, and I'm saying, oh, it's a 216% return. No, the return was really only 64%. And if you look at it in terms of price, the price was not a big mover as well. The price went from $63.18 up to $87.29 when it had the return of 216.7%. During the same time frame, what we had for Boyle was we had a price change that happened on 4/13. And on 4/13, it had a negative return of 82.7% for the year. And it went up to, or it went down to a minus 78.6%. And from that point, which was on 4/18, it went from minus 78.6% to a minus 85.0%. That was a move of 13 days, and actually it was a move of 6.4%. However, price-wise, it went from $3.81 a share down to $2.66 a share, a loss of $1.12, which is a 33% loss for that time frame. So if you're going to invest in these, and I do think that they are worthwhile investments, look at the 13 days, look at what happens, in terms of the fast and the slow stochastics. When we had a change in the stochastics, it was the same number on the fast stochastic for 2 days in a row, 18.1 on 5/4 and 5/5. On 5/8, which was the next trading day, it went up to 23.7. And today, the fast stochastic is 50.2. The slow stochastic was 31.9 on 5/4, and it is 38.8 today. So we still have the fast stochastic ahead of the slow stochastic. We are day 7 yesterday, day 8 today, so we would have 5 more trading days in the 13-day cycle, if that holds true, that you could make a profit in Boyle. So that's all I have to say. Anything else, Raja?
That's it. Okay, all the recordings are done.
Okay, well, now it's Raja's turn to talk.
I did not record everything. It was
okay. No
Maybe
problem.
you want to, sorry to speak.
Okay,